Firstly, good morning and welcome to our webinar on managing your cash flow during a crisis. I hope you've all been well and managed so far during lockdown. Hopefully you've learned new systems and way to do things that will benefit in the long run. We definitely have, with things like bringing on board these Zoom meetings. However, if you've really struggled or are worried about your business in the future, please get in touch and we'll be able to help. Just let us know what the issues are. We've never been through anything like this pandemic before, and hopefully never will again. And there's still a lot of uncertainty around as to what your business is going to be like, what the economy is going to be like. So at the moment, the most important thing is making sure that you're on top of your cash flow and that you can see through this crisis. We wanted to put on this event to bring you up to date with current government support schemes and help you to prepare for the phasing out of the support, which I'm sure is going to be the next stage. So what we want to cover is how you keep more money in the bank, a recap on the current position with the government support schemes, how to think outside the box to keep more money in your bank, and how to keep do your cash flow planning. So they're the topics today. So keeping money in the bank, it's really important to focus on that at the moment. As advisors, at times, we recommend that you spend money, either invest it on equipment or advertising and the like. This certainly isn't one of those times. There's so much uncertainty out there. You really do need to be thinking of keeping that money in your bank and in your business so you can cover whatever's going to be thrown at us over the next few months. So a brief recap of where we are with HMRC and government initiatives. Going to keep this brief. Hopefully they've all been well publicised and you're well aware of them. But if you do think you've missed anything as we go through it, let me know and we can give you more detail. So HMRC initiatives, deferring VAT and income tax. So although you needed to still submit your VAT returns, you didn't need to pay anything on them. Now that began from 20th of March and ended on 30th of June. So from now on, you've still got to submit your VAT returns and pay the VAT as usual. But those periods that were covered by the support, you have until the end of March to pay those liabilities that you've accumulated. If you're self-employed, you'll normally have had a payment on account to make on the 31st of July. You don't have to pay that. That will be collected in your payment that you normally make on the 31st of January. So yeah, if you haven't made that payment yet, you don't have to. Another HMRC initiative is the job retention scheme. You'll know it as a furlough scheme as well, in which you got 80% of furloughed staff salaries repaid. This is now being phased down. Unfortunately, you cannot furlough staff now unless they've previously been furloughed prior to 30th of June. So if you've furloughed staff before June, you can continue furloughing them. However, if the bite's only beginning to hit you now, you cannot furlough them unless they previously have been. So also that's further being diluted from October, and the support's reducing from 80% to 60%. So again, you'll either have to pass that on to your staff, or it's going to cost you more to keep them furloughed. For self-employed people, the scheme is being extended, and those eligible are able to claim for a second and final grant. Again, that was 80% of average monthly profits. That's being cut to 70%, and applications are being allowed from August. So you can start making those applications now. One negative on this is if your average profits are above 50,000, you don't get anything. Another one for employers is the statutory sick pay relief. This was initially removed a while ago by HMRC, so small employers could not recover for employees that were off sick. They brought that back, so you can claim. There's no 3-day wait, and it's now available from the first day of sickness. So if you have any employee who has to self-isolate due to the terms of the COVID regulations, then you should pay them statutory sick pay of £94.25p a week, which can then be recovered against your pay-as-you-earn liability. Moving on from HMRC initiatives to government. 3 main areas: grants, loans, and rates relief. Now, the grants, it's an initiative for businesses with premises who are in receipt of small business rates relief. You're automatically entitled to a one-off grant of £10,000, which you apply for through your local authority. For larger businesses in retail, hospitality and leisure, they're entitled to a grant of £25,000. So again, it's a hugely generous lifeline to some businesses. If you've not claimed these or looked into them, I highly recommend that you do so. Loans, following on the government-backed loans, there's CBILS, business interruption loan scheme, that's for larger businesses, self-employed loans, and the bounce-back loan. The main points are that they are guaranteed to a point by the government. The bounce-back loans, which are probably more applicable to most of our clients, are for smaller businesses. They're 100% guaranteed by the government. The application process is really simple. No interest is charged for a year, nor are any repayments required. And the interest rates are low, 2.5%. Now, it may well be worth applying for these, even if you think you don't need it. You can always repay it when things settle down, if you've not had to use it, of course. Now, bear this in mind when we go through the cash flow forecasting, because when you enter your figures, you may realise further down the line that you might have a requirement. So the bounce back loan is something to call on. We're recommending that they're used also if you've currently got finance agreements or loans, etc. Because it's such a low interest rate and you've got a repayment holiday, you can use it to pay off some of your existing finance arrangements and therefore get a far cheaper deal going forward by replacing it. Now, how long these are going to last, we don't know. There's no specific date been given. The government has promised that there's going to be 330 billion of guaranteed loan support. I believe at the end of June, there'd only been 40 billion taken up, so there is a lot still available. So it might well be a case of getting in there while you can. Another support package is the business rates holiday for nurseries, retail, hospitality and leisure. Now that includes shops, restaurants, cafes, drinking establishments, cinemas, live music venues, hotels, guest and boarding premises and self-catering accommodation. So that's it for all the government initiatives. But if you want to double check, there's a support finder tool available on the government site. There's the link. If you want that, just put in the chat box support tool, please, and we'll send you the link just so that you've got it. It's a good idea to run through it just in case there's something that is on there that has not been well publicised and it may be applicable to you. So there's the next stage is other ideas. Now, there are other things to bear in mind, such as a time to pay coronavirus helpline, employment and support allowance if you can't work while self-isolating, R&D tax credits to look into, different types of finance that may be applicable to you, such as asset finance, invoice finance, merchant cash advance. I'm not going to cover those in detail. It can get a bit more in depth. So if they're applicable, let us know and we can help you through them. So moving away from government and HMRC support now, there's potentially a variety of ways in which to protect cash flow, but I'm going to mention a few basic ones which may be applicable to your business. So stock. Don't buy any stock. For those of you that this is applicable to, you might be bombarded by suppliers trying to sell you heaps of stock, offering discount prices. Now, if you've got plenty supply of money in the bank, it could be advantageous to take advantage to take those deals. But if cash flow is potentially compromised, don't stretch yourself by buying stock. Just buy the bare minimum to make sure that you can service your requirements. It's expensive to basically store a warehouse full or a stock room full of products, and it ties all your cash up. Now, corporation tax, it's not officially part of an HMRC initiative, but if you've got a corporation tax billing, I would ask HMRC for a time to pay arrangement so you can spread that repayment or that payment of tax over time. It's another way of helping keep money in your bank. Chase your debts. If you do have people that owe you money, don't feel shy about chasing them. It's time to collect, especially if you're dealing with bigger businesses. They should have the reserves, and you need it more than them. However, if your customers are smaller, they're likely to be affected too. And realistically, you're going to have to probably come up with a payment plan that helps you and them through this time. Negatively, what you've got to bear in mind, though, is if the worst does happen to them and they can't survive, then it's unlikely, if they go out of business, that you're going to get anything. So it's a balancing act as to trying to chase the money in or coming up with an agreed plan. Best thing is to keep in contact with them, make sure they know how valuable you are, because this is going to pass, and we're all going to need each other to, there for each other when it's all over. Reduce your personal outgoings. At the moment, I'm sure we're not spending as much money as we normally do, but look at how you can cut this down further. Ask mortgage companies to give you a 3-month holiday. I think for the most part they're willing to do this as long as you've got a good credit rating, etc., or good history with them. Ask the same for personal loans or credit cards, and also see if they'll freeze the interest. Cancel or suspend gym memberships or other things like that. Just make sure that you've trawled through your bank statement, and for things that you're not using, just cancel them so it reduces the money that you need. Obviously, the less money that you need to draw from the company, the better the cash position is going to be. Know your break-even figure. Now, this is how much money you'll need each month to cover all your costs. So it's an important planning tool. If you've got bookkeeping software such as QuickBooks Zero or anything like that, or another bookkeeping package, it's relatively easy, such as pulling out a monthly profit and loss account and figuring out your costs from there. If you do look at a profit and loss account for the past, if there's any one-off costs in there, you can remove those because they're not expected to occur in the future. So that gives you a better idea of how much money you do need to be bringing in each month. And cash flow projections. Now we're going to be going through this in more detail shortly. So cash flow is different from your break-even because it's a tool that shows all your income and outgoings, and will calculate where you expect your cash position to be each month going forward. As I say, cash flow projections show the flow in and out of cash from to and from the business. You'll be able to see those periods that do show a shortfall and those with a surplus, and it is a key tool, so we'll be going through that. So let's show a demo on how to set up your cash flow, but just a bit before that, there will be chance for question and answer session at the end. We're here to give you help and advice, hopefully answer questions, potentially have a brainstorming session, and if you've got any particular issues, we can go through those. Now, we have set up a business hub for managing your cash flow in a crisis. We have already uploaded some useful tools and will continue to be adding various webinars, tools, troubleshooting sessions in there. So if you are interested, please type yes in the chat box now, or you can email me on info@Wren Accountancy, subject line Business Hub, and I'll send you links or a link where you can join that, and then once you're a member, you can log in anytime you want and see what support packages are there. Obviously, we'll be keeping you up to date with any additions as we make them. So that's going to be a constant line of support for you from us. By the way, if you do know of anybody else who may benefit from this, they don't have to be clients, please pass on our details or send their details to us. We're more than happy to add them and share this, because we feel it's all about helping businesses through these times, as it's going to benefit us all in the long run. So I've mentioned the break-even figure, which is another key tool. We're going to be running another webinar on this same time next week. It will also be recorded, so we'll be sending out invites to that again. And again, if you know anybody else that will benefit from it or may benefit from us, please let us know. Right, now for the demo of setting up your cash flow. Again, the template's going to be in that hub that I've mentioned, which you can download and use as many times as you like. So I'm just going to switch screens, so bear with me a second, please. Has everybody got the spreadsheet in front of them? Yeah.
All looking good. All looking good.
Yep, cool. Right, so this is a simple cash flow forecast. That's what it looks like. You've got the receipts showing all the different sources of income at the start, and then all the payments and outgoings on the middle section, and at the bottom section it shows you the cash movement, starting with the opening cash balance, ending with the closing cash balance. Now this spreadsheet has all been pre-populated, so it's got the all the addition columns and already preset. So from the start, on the date, I've got this 1st of August. If you change, it moves on, or you want to start from January or whenever, just simply type in the date and you'll see the months all change across the bottom. We'll start from August, so okay, let's make an assumption. You've been closed down until start of August. You make 5,000 gross sales in August, but you've got average terms of 30 days. So you're not going to receive that 5,000 in August, it's going to fall into September receipts. Obviously, you've got to bear this in mind because it can affect dramatically what your figures in a particular month are going to look like. Let's just continue assuming that you're growing back your business to your normal amount of £10,000 a month, and you expect your sales to be that every month going forward. Now, instead of typing it in, just a quick tip, in that square on the 10,000, you'll see a little green square in the corner. If you move your cursor, click on that, click down and drag, that just copies it across. Sorry, I should have mentioned, I'm going to assume people need this level to make sure that they know what they're doing. Some people could be well skilled with spreadsheets, but I just want to make sure that people can use them if they're not used to using spreadsheets. Bank interest, if you're lucky enough for your bank to give you interest, then slot that in. We've mentioned grants. Now, assuming you haven't previously applied for your grants and you managed to get one, then you've got, say, 10,000 dropping in August. So you can see on the top there, your income is building up and showing what's coming in each month. Not going to go through every line, but let's assume you've got a marketing agency and they're on a retainer of 250 plus VAT. So that is £300. and then they pay, and you're paying them every month. Same with accountancy, would be the same amount, £250 per month plus that. Add that across. Bank charges, I don't know, typically about £15 a month. And I will say, sales is very much a gut feeling, a prediction, and that can vary. For the most part, you'll know a lot of what your costs are, so your payments are quite, hopefully, relatively easy to plop in there. You can go through adding salaries, say your normal salaries are £5,000 a month. Now, assuming those staff are going to be furloughed for the next 2 months, so let's put furlough grant in. So you've got 5,000 at 80%, so 4,000, 4,000. And we know in October it's dropping down to 60%, so that's going to be 3,000. And then we'll say that you're bringing them back off furlough there. Also, we'll say that you're drawing £3,000 a month. Just put that through. VAT. These are all gross figures. Let's just assume that your normal VAT bill is £3,000 a quarter. If you want really accurate figures, you're going to have to do some more detailed calculations for VAT, but this is just to give you an idea. So you can slot all your figures in. What you end up with is a net cash movement each month. Let's say you've got an opening cash balance of 5,000. Now the current picture shows that your closing cash balance is always positive. So you've got no need there for any further income to apply for a loan or any other support. Let's just see if we add in some big repairs or something. Got a tax bill, say 5,000. When you see these hashtags, it means the columns aren't big enough. So you just go up to the top of the column, move your cursor there, click down and drag the column width to expand it. You'll also note that you can't see the months at the top. The further down the spreadsheet you go. If you want to keep the months in view, just move your cursor to the and click on the row below the date. Go into View and Freeze Panes, and that will lock those that line in. So when you scroll down, you can still see the dates. Just helps you know which column you're adding amounts into. So now we've added some expenditure in, we can see that you are expecting October to be struggling for cash. You've gone into a negative cash position. So in advance now, you can start planning and think, right, I need to approach the bank for a loan. Assuming your bounce back loan comes in September, say you apply for 10,000. That now puts you back into a positive position. On that loan, you won't have any repayments this year, but when you start planning ahead for next year, you'll be able to build those in. And that's very quickly and basically your cash flow planning tool. Hopefully you've all got the gist and know how to use it. Obviously, if you need any help with it, we're here. You can talk through any questions you have with us. I'm here for you to contact afterwards. So if you do have any questions, please get in touch. Yeah, just on the bounce back loan, just want to make sure that you're aware that that is up to 25% of turnover or £50,000. Okay, whichever's the lesser.